All right, so let's continue on here with our credits. All of our credits. So the retirement savings contributions credits, also known as the Savers Credit. This credit is restrictive with regard to how much it is, obviously, and how much income you have. So AGI factors into this as well. It is 0 to 50% of contributions that were made toward a retirement savings account. So we're talking about a IRA, traditional IRA or Roth IRA, 401k, 403b, any of those types of retirement plans. And it doesn't have to be a direct contribution. They could be contributions that were made through payroll withdrawal. So this is, again, like I said, this is one of those rare instances where they're allowing you to double dip. You can get a deduction. It can reduce your taxable income, but then you can, as long as you meet the qualifications, you then get a credit as well, which can be a pretty good deal for individuals. So you got to be an eligible individual, obviously, and we've got to figure out what our AGI and filing status is in order to take this. Contributions, again, made to IRAs or traditional or Roth, 401k, 403b, 457. So 403b is the same as a 401k, that is for nonprofit organizations, employees of nonprofit organizations. 457s, same thing, but it's for employees of governmental entities. So same sort of thing, but just different sections of the tax code. Simple plans are for small businesses, and SEP plans are for self-employed individuals who want to contribute to a retirement plan. That's not to say that you can't also, there are certain circumstances where you can contribute to multiple types of retirement plans if you have that opportunity. Again, we're going to look at our modified AGI. So AGI, starting with AGI plus any our income that was earned abroad or in U.S. territories or possessions that wasn't taxed. You got a foreign income exclusion on that income. So maximum amount of contribution for the credit is $2,000 per person. And so on a joint return, that would be $2,000 for each spouse. So this one is not limited to the tax return, but it is limited to the spouse and taxpayer on that. So each could get, and this is the $2,000 is the contribution amount, not the credit limitation. So if you contribute $2,000 and you're eligible for a 50% credit, then you get a $1,000 credit for it, right? But it is anywhere from 0 to 50%. But the most you could get, the highest amount of credit you could get is $1,000 on this. So Form 8880 is what's used to calculate this credit. So you can see there's two columns here, one for you, one for your spouse, asking first off, what IRA contributions did you make, what 401k or other types of contributions did you make, so your total contributions. Yeah, don't worry about any distributions received. Yeah, you don't have to worry about that one. And then the smaller of line 5 or 2,000, so this is where your $2,000 limitation on contributions comes into play. And then the amount on this is, here's your AGI before the credit. Of course, your AGI is going to come before the credit anyway, because the credit's going to show up on page 2 of the 1040, and your AGI is on page 1 of the 1040. So your AGI here, that's what's on line 11. And then enter the applicable percentage. And you can see this is where the AGI limitations are. So, and it depends on, so the AGI is, you don't get a higher AGI if you're married. The AGI limits are just what they are. So, over this amount, but not over this amount. So you can see if your AGI is under $21,750, this provides you the greatest credit, the 50%. It starts to go down and diminish especially for, let's see, married filing jointly, the 50%, I guess this is where the AGI benefit comes in for married filing jointly. The 50%, whoops, the 50% contribute or 50% credit amount extends to a higher AGI than for head of household or single or married filing separately. You can see, so for married filing jointly, once your income, your AGI reaches 43,500, now you're down to 20% of your contribution is eligible for the credit. So if you made a $2,000 contribution and your AGI was 32,000, then you would get to take $1,000 credit. You would get $1,000 credit for that contribution. If, however, your AGI was $40,000, then your contribution is going to be limited to $400, or your credit's going to be limited to $400, 20% of that $2,000 amount. Even if you contributed, $10,000 to it. Okay. Now the great thing is, though, that like if you made if your contributions were pre-tax, like a 401k or something, that's going to bring your AGI down. So the contribution itself is going to help to bring you into a more preferential tax range, AGI range, for purposes of this credit. So that's another advantage that you get with it. So for example, if your income was $30,000, but you made, for whatever reason, $10,000 of 401k contributions from that, that brings your AGI down to $20,000. So if it was originally $30,000, you're going to be, well, that's not a very good example. Let's say it was $40,000 brought down to $30,000. So $40,000, you would have been at the, no, it's still half of it. That's not a very good example either.
Maybe if you're single.
Let's say 45. If you're single, okay, if you're single, here we go. If you're single and your AGI is $40,000, you get no credit. But you made a $10,000 contribution to a 401k, which brought your AGI down to $30,000. Now you get to take at least 10% of the credit, right? So that's where this, so on line 9, this is where you enter in the appropriate percentage here, and then multiply it, and then this does the calculation for you, determining what that credit is. And this is just it. I mean, this is just what we went through, but it was on the. So let's take a look here. Hector, single filer, modified AGI of 25,000, makes a $1,000 contribution to an IRA. Retirement savings contribution credit would be $100 because he is single. So looking at the chart here, I guess they've kind of condensed it here. So for single between 0 and 21,750, and between 21,750. I'm sorry, 23,750 and 36,500, it's a 10%. So this, you can see this 20% range is pretty narrow. It's only a couple $1,000s there for single. This one's what, $3,000? And this one's a $4,000 range. But then once you get to 73,000, if you're married, or these numbers, after that you don't get any credit. So you see it's really for low-income individuals to encourage them to contribute their ample salary to a retirement account. I know that's difficult for them to do. Another example here, in this example, I'm not going to go through that. It's pretty self-explanatory in how to figure it. Any questions about the retirement savings credit? Okay. Like I said, it's great if you